We've got Dr. Rangarajan, the Chairman of the Prime Minister's Economic Advisory Council, joining us on the phone line. Dr. Rangarajan, your first impressions on the 6.8% number?
I think the overall number is encouraging. It shows that perhaps industrial production is picking up, and we may expect to see slightly improved behavior in the months of February and March. Therefore, in that sense, the January number is encouraging. But the composition of the index of industrial production, particularly the growth rates in some of the sectors, is not very encouraging. The capital goods sector is still not doing well. It is still a negative. And the intermediate goods sector is also showing a negative sign. But the big push has come as a result of the consumer non-durables. The increase is as high as 42%. One needs to take another look at what is contributing to this big rise in consumer non-durables. But as I said, the composition is somewhat disturbing. I mean, one had expected that the capital goods sector will also pick up.
Sure. But Dr. Rangarajan, 1.8% is what we had in December. From then, against even the most optimistic expectation of a 4% growth in January, we've got a final number of 6.8%. Does this once again raise, question marks about this whole issue of volatility in the index, unpredictability, even the credibility of the index?
Well, we had some concerns about particularly the data relating to the capital goods sector. If you had looked at the data for the last several months relating to the capital goods sector, they have been violently fluctuating. And therefore, one had felt that there was a strong reason to look particularly at the way in which the data on capital goods sector is collected and collated. Therefore, but now the surprisingly strong growth in the consumer non-durables also points to the need to look at other segments of industrial production. But I would still say that the need to look at the index of industrial production, particularly the data relating to the capital goods sector, remains important.
Dr. Rangarajan, afternoon. Avan joining into the discussion. Now, given the kind of numbers that we're getting, going by the global as well as corporate India's challenges, what is the growth figure that you are going for that we are likely to clock in? Do you think it will be at 6.9% or perhaps lower?
Well, we think it will be a shade higher. I think the Economic Advisory Council had estimated that the growth rate could be in the region of 7.1%. We thought agriculture would go slightly better than what the advanced estimates of the CSO had indicated. If manufacturing also does a little better in this last quarter of the fiscal, we might be able to do a shade better than 6.9%. Therefore, I do not think that there is any possibility that the growth rate will be less than 6.9%. If at all, it could be a shade better.
So what course of action do you believe the RBI will take on the 15th of March?
No, I think that will depend mostly on how inflation behaves. But I do believe that the RBI has already taken a very strong action in reducing the CRR by 75 basis points.